Hello, traders out there in Traderland. My name is Dez. I'm a mentor and analyst here at Grok Trade. It is Wednesday, November 3rd, 2010. And what a market we had today. Check this out. We did end up in positive territory. We had the Dow up 0.25%, more than that on the S&P at 0.4%, 0.25% on the NASDAQ, Russell 0.3%. The banks led the markets all day long. For those of you who were inside the chat room today, you know we were talking about this. It does not surprise any of us that we ended bullish because the markets are as strong as the financials, and sure enough, we have the financials leading the markets. And look at this massive drop. I mean, boom! We have the VIX come crashing down more than 9%. 9% on a break-even day for the most part. I mean, we're up, but not by much. Why would it drop so much? Well, look at the intraday chart, such as a 5-minute chart, and go to about 2:15, 2:30 today when the FOMC came out, made their announcement. The volatility absolutely dropped. I mean, it looks like a falling knife. It comes straight down. It's a pretty incredible chart if you hadn't saw it yet. But anyway, what did they say? Well, QE2 is here in a big way. The Fed's taking a bold step to boost the economy. When I say bold, I mean that because they have put out there that they're going to buy $600 billion in long-term treasuries over the next, get this, 8 months. All right, should prove to be pretty positive for the markets as a whole. However, there's a lot of skeptics out there, especially the traders, investors. We tend to be a little more savvy when it comes to some of this talk. What is that going to do to inflation? All right, if you're in YouTube, go down in the comments and let's hear your opinions. If you're here on our website, go to the forums and let's get some conversations started there. But let me talk about something that actually holds more importance, and I want you to get this. I'm on a soapbox here. Don't trade your opinion. It doesn't matter what your thoughts are. Your opinion will never make you money. If it does, buy a lottery ticket. You got lucky. Us, here, savvy traders, what we do is we focus on the charts. We focus on the charts. Price action. We focus on volume. We focus on specially chosen indicators and those oscillators that we want to bring into the mix. That's where it's at. We trade what we see, not what we think, not what we believe, not what our opinions are. We don't bring our emotions into trading. It's a business. We trade what we see. We have to have the very best of technical analysis skill sets. Those don't come by accident. You learn them. But anyway, check this out. We have gold down 0.7%. The dollar drops 0.5%. And wow, I mean, everything's looking pretty bullish here. If you go to the markets, check this out. S&P daily. I mean, look at this. We come dropping down, boom, to the south. We come right into all this support area. See that? Right smack dab in the middle of those two. They were gold lines yesterday. Big area. And then we found support. We rallied back higher and higher and higher. And near the close of the day, we stop at 1196. You can see this. And I thought it's going to be tough to get over that. Why? Because it was tough right here to get over it on October 25th. And right here on November 1st. And right here yesterday, November 2nd. And we hung out and then we popped over it. We ended the day really strong. We have continuation on the MACD. We have more bullish ticks on the histogram. We made a lower low, but more importantly, we made a higher high. Very nice to see. Now, some people would say, well, listen, we have an up leg here. That looks like a hanging man reversal pattern. And it could be just that. With the news that we have here, it would be hard for me to see a major correction happen anytime soon because we have the government intervention, the Fed intervention coming in to help prop these markets up. So long as we're making these new higher highs, don't fight the trend. Don't try to be a bear in a bull market. A lot of our students make that mistake or before they come to us. That's one thing that we correct in them. When they get to us, we say don't be a bear in a bull market, don't be a bull in a bear market. Speaking of that, if you're lucky enough, if you watch this video before 9 p.m. Eastern Standard Time tonight, Wednesday, that's 6 p.m. East or Pacific, if you see it, you are able to go to this site. Let me show it to you. the website Free Online Trading Education. When you click on that, what you want to do is go to the bottom of the page, and at the bottom of the page you're going to see this little toolbox, but over here you're going to see Meet the Mentor. You get to talk with me live tonight. When you click on this, you're going to get this information about our mentorship, and then right over here on the side, you have to fill this out, but you have to do it before 9 o'clock. I'd say before 8:30 Eastern Standard Time. Get it filled out, and Mike will get you an invite sent, so you can join us if you want to hear more about me mentoring you, me teaching you how to trade, because you have to have a mentor. But anyway, let's get on with technical analysis. I want to also bring in the Dow. The Dow here, we had this trend line drawn that we went below it, but now we're starting to bounce up over it. Look at this 20-day moving average coming up. Support, 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 and today's support. But the thing that I'm looking at here is we closed above that trend line. However, we do have this resistance line that we've drawn in, 11,218, that goes way back, that we're not over. We stopped right at it, so it doesn't surprise me that we stopped right at it. If I go over here to the NASDAQ, nice up leg, and to be quite frank, this is what's called a hanging man reversal pattern, but we made a higher high, higher low. I think news will trump this reversal pattern. The only way to confirm this is if we got a lower low. I don't see that happening. Not tomorrow. Now, anything obviously can happen, but I see some nice movement to the upside. I have a little 8 EMA. That's that gold line. Support, 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 and act as support again. As long as we stay above that little EMA, all is well in the world. But anyway, here we are looking at the Russells. Russells up here trying to penetrate some significant areas. If I go right there to these highs, right there, look how we're over that. I mean, that's pretty impressive. Now, we have some major lines to contend with coming into the future, but that's where we're at. Nice roll over here on the MACD to the positive side, positive histogram ticks. Things look pretty bullish out there, but let's see what happens. There's a rebalancing of power in the markets. Will that matter? Maybe, maybe not. I'll tell you this, the Fed coming out and saying they're going to be buying up all these treasury bonds, that'll matter to the markets. I just hope it doesn't have any long-term repercussions that we, may not find overly good. So there it is. I hope each of you guys can meet us tonight. On the next slide, you can you'll get the URL, the website, so you can come and join us if you so choose. Take care. Safe trading to each and every one of you.